our knowledge series on corporate tax in UAE. In this video you will learn about the corporate tax period, registration and returns. This video covers the following important matters: legislations pertaining to tax procedures, time limits under corporate tax law, corporate tax registration requirements and amendments, deregistration requirements, tax period and conditions to change the tax period, corporate tax returns, FTA notices, language requirements, clarifications from FTA, records keeping requirements. Introduction. This video deals with the administrative aspects of the corporate tax system. Legislation. Following legislations are concerning the tax procedures. Federal Law No. 28 of 2022. The Tax Procedures Law deals in more depth with procedures, and applies from March 1, 2023 to corporate tax and also to other taxes including VAT and excise tax. Cabinet Decision No. 74 of 2023, the Tax Procedures Regulation, gives further procedural detail. This applies to corporate tax unless contradicted by any provisions in the corporate tax law. Corporate tax law itself covers certain administrative requirements which are specific to corporate tax. Time limits under corporate tax law. Timescales within the tax laws are usually provided in terms of business days. Article 1 of the Tax Procedures Law defines a business day as any day of the week, except weekends and official holidays of the federal government. According to Article 48 of the Tax Procedures Law, where a period of time is not specified for the performance of any obligations or other procedure in the Tax Procedures Law or the Corporate Tax Law, FTA shall grant the taxable person a period, appropriate to the nature of the obligation or procedure, in between 5 and 40 business days, extendable by FTA, from the date of the event giving rise to the obligation or the conduct of the procedure. Under Article 49 of the Tax Procedures Law, the following rules shall be considered when calculating time periods: the day of notification or the day of occurrence of the event by reason of which the time period began shall not be included. If the last day of the time period is not a business day, the time period shall be extended to the next business day. Registration. Tax registration number, TRN, will be issued to a taxable person after registration with FTA for corporate tax purpose, which is used in tax returns and in all other correspondence between the registered taxable person and the FTA. As per Article 51 Clause 1 of the Corporate Tax Law, it is compulsory for a person who becomes subject to corporate tax to obtain a TRN, except in circumstances prescribed by the Minister. Under Article 2 Clause 1 of Ministerial Decision No. 43 of 2023, concerning exception from tax registration, following persons are not required to register for corporate tax purposes: government entities, government-controlled entities, persons engaged in an extractive business and non-extractive natural resource business that meets the conditions of Articles 7 and 8 of the Corporate Tax Law, respectively. Non-resident persons that derive only state-sourced income as specified in Article 13 of the Corporate Tax Law, and do not have a permanent establishment in the UAE. As per Article 2 Clause 2 of Ministerial Decision No. 43 of 2023, where any person who is not required to register undertakes a business or business activity that is subject to corporate tax, they will need to register for corporate tax with the FTA. Article 51 Clause 3 of the Corporate Tax Law mentions, the FTA may register a person for corporate tax where no application has been received, effective from the date the person became a taxable person. This would be relevant, for instance, where the FTA received information suggesting that a person should be registered, but no application has been received. Under Article 51 Clause 2 of the Corporate Tax Law, the FTA may require following persons to register for corporate tax and obtain a tax registration number: an exempt person who is a qualifying public benefit entity, qualifying investment fund, public and private pension or social security fund subject to regulatory oversight of competent authority in UAE, and a juridical person in UAE that is wholly owned and controlled by government, government-controlled entity, qualifying investment fund, public and private pension or social security fund stated above, who conducts part or whole of the activity of the exempt person, engage in activities for the benefit of exempt person or ancillary activities to those carried out by an exempt person, or an unincorporated partnership. Unincorporated partnerships. Unless an application is made to the FTA under Article 16 Clause 8 of the Corporate Tax Law, unincorporated partnerships are fiscally transparent and are not required to register as a taxable person. In this case, each partner must assess whether they are required to register for corporate tax. Amendments to registration. Under Article 6 Clause 4 of the Tax Procedures Regulation, a taxable person must inform the FTA within 20 business days of following changes in their registration details: name, address, email address, trade license activities, legal entity type, partnership agreement for unincorporated partnership, and articles of association or its equivalent, address from which any business is conducted by the registrant. Deregistration. Article 52 Clause 1 and 2 of the Corporate Tax Law mentions, when a taxable person ceases to trade, ceases to exist, or otherwise is no longer considered as a taxable person, they must apply to deregister after payment of all corporate tax liabilities and any administrative penalties due, and filed all tax returns due including the tax return for the tax period up to the date of cessation. As per Article 52 Clause 4 of the Corporate Tax Law, in cases where the person does not comply with the corporate tax deregistration requirements above, the FTA can deregister a person for corporate tax, effective from the later of last day of the tax period in which it is apparent to the FTA that the aforementioned deregistration conditions have been met, or date the taxable person ceases to exist. Tax period. Article 57 Clause 1 of the Corporate Tax Law mentions, the taxable person's tax period is the financial year, or part thereof, for which a tax return is required to be filed. Under Article 57 Clause 2 of the Corporate Tax Law, the financial year of a taxable person will be the Gregorian calendar year, January 1st to December 31st, or 12 months period for which the taxable person prepares financial statements. For a natural person, the tax period is the Gregorian calendar year, hence the corporate tax will apply from January 1st, 2024, if applicable. Corporate tax applies to a company or any other form of juridical person from its first tax period beginning on or after June 1, 2023. For example, a company with an accounting year-end date of May 31st will be brought into the corporate tax regime with effect from June 1, 2023. A company with an accounting year-end date of April 30th will be brought into the corporate tax regime with effect from May 1, 2024. Conditions to change the tax period. According to Article 58 of the Corporate Tax Law, a taxable person can make an application to the FTA to change the start and end date of its tax period or use a different tax period, subject to conditions set by the FTA. Under Article 2 of FTA Decision No. 5 of 2023, on conditions for change in tax period, a taxable person can apply to the FTA to change the start and end date of its tax period, or use a different tax period, where the following conditions are met. The change is for one of the following reasons: the taxable person's liquidation, aligning the resident taxable person's financial year with the financial year of another resident person for the purpose of forming a tax group or joining an existing tax group, or aligning the taxable person's financial year with the financial year of its domestic or foreign head office, subsidiary, parent, or ultimate parent company, for the purpose of financial reporting, or to benefit from a tax relief available under the corporate tax law or under the legislation of a foreign jurisdiction. There is a valid commercial, economic, or legal reason. The taxable person has not yet filed the tax return for the tax period to be changed. The application relates to extending the current tax period to be a maximum of 18 months, or shortening the next tax period to be between 6 and 12 months. The application is made within 6 months of the end of the original tax period. Where the change is to shorten a tax period, the change must relate to a future tax period. Returns. Under Article 53 Clause 2 of the Corporate Tax Law, a corporate tax return must at least include the following information, as applicable: Tax period to which the tax return relates. Name, address, and TRN of the taxable person. Date of submission of the tax return. Accounting basis used in the financial statements. Taxable income for the tax period. Amount of any tax loss relief claimed by the company. Amount of any tax loss transferred to another company. Available tax credits claimed. Corporate tax payable for the tax period. As per Article 53 Clause 5 of the Corporate Tax Law, FTA may at its own discretion request the exempt persons to submit a declaration, including qualifying public benefit entity, qualifying investment fund, public and private pension or social security fund subject to regulatory oversight of competent authority in UAE, and a juridical person in UAE that is wholly owned and controlled by government-controlled entity, qualifying investment fund, public and private pension or social security fund stated above, who conducts part or whole of the activity of the exempt person, engage in activities for the benefit of exempt person or ancillary activities to those carried out by an exempt person, or any other person as may be prescribed by a cabinet decision. According to Article 53 Clause 6 of the Corporate Tax Law, in the case of a fiscally transparent unincorporated partnership that is unapproved application to be treated as taxable person, the FTA may request the authorized partner to submit a declaration on behalf of all the partners within the unincorporated partnership. Article 53 Clause 7 of the Corporate Tax Law states the parent company must file the corporate tax returns on behalf of the tax group. Notices. As per Article 11 of the Tax Procedures Regulation, notices are sent to the taxable person's address registered with the FTA. Where a taxable person has appointed a tax agent or other legal representative, the FTA may contact the taxable person, his legal representative, or his agent. Article 11 Clause 2 of the Tax Procedures Regulation states, the address registered with the FTA includes, but is not limited to, the address provided by the person to the FTA, or the address of its usual or last known place of residence or business. Under Article 11 Clause 1 of the Tax Procedures Regulation, notifications are valid if they are delivered by any of the following means: post, registered post, email, mobile text message, smart applications, or the electronic system of the FTA, posting in a prominent place in the premises of the person, or any other means as may be agreed in writing by the person and the FTA. Language. According to Article 5 of the Tax Procedures Regulation, the FTA may accept records and any other documents in English. However, the FTA may, at its discretion, request that some or all of the documents are translated into Arabic, which must comply with the law requiring translation in the UAE, and be submitted to the FTA within the period it specifies. Corporate tax returns. Article 53 Clause 1 of the Corporate Tax Law states, returns must be submitted to the FTA within 9 months of the end of the tax period, or by such other date as is determined by the FTA. Clarifications. According to Article 59 of the Corporate Tax Law, a person may make an application to the FTA for a clarification regarding the application of corporate tax law, or the conclusion of an advance pricing agreement with respect to a transaction or arrangement proposed or entered into by a person. This application can be made before or after a transaction or arrangement has taken place, but before the corporate tax return is submitted. The person seeking clarification must be a party to the transaction. Any request for clarification must be made in the form and manner prescribed by the FTA. The FTA User Guide, USEG 001, provides guidance on who may apply for clarification, how eligible applicants may submit clarification requests to the FTA regarding specific tax matters of uncertainty on which they would like further guidance, as well as instances where a clarification application may be rejected. The FTA response on the clarification applies to the applicant and the specific transaction on which such advice has been requested only, and does not set any precedent for future treatment or for persons other than the applicant. The taxpayer must submit the clarification request by email using a formal letter including details of the facts, legal references, the applicant's technical view, any alternative treatment which they consider may apply, and the questions for the FTA to clarify. For a tax group, the parent company will submit clarification requests. Responses to clarification requests may take up to 40 business days. Records. Article 53 Clause 3 of the Corporate Tax Law states, taxable person must provide information, documents, or records as reasonably required by the FTA for the purposes of implementing the provisions of the corporate tax law. Sufficient records must be kept to substantiate what is shown in a corporate tax return. As per Article 54 of the Corporate Tax Law, the FTA may require a taxable person to submit the financial statements used to determine the taxable income for a tax period. Under Article 2 of Ministerial Decision No. 82 of 2023, on the determination of categories of taxable persons required to prepare and maintain audited financial statements, the following taxable persons must prepare and maintain audited financial statements. Taxable person with revenue exceeding AED 50 million in the relevant tax period, and qualifying tree zone person. Under Article 54 Clause 3 of the Corporate Tax Law, the FTA may require the authorized partner to provide financial statements showing the following in respect of an unincorporated partnership: total assets, liabilities, income, and expenditure of the unincorporated partnership, and partner's distributive share in the unincorporated partnership's assets, liabilities, income, and expenditure. Standard retention period. Article 56 of the Corporate Tax Law mentions the standard retention periods, which differs from those as set out in Article 3 Clause 1 of the Tax Procedures Regulations. In such circumstances, the retention periods as per the Corporate Tax Law must be adhered to. Under Article 56 Clause 1 of the Corporate Tax Law, a taxable person must maintain for a period of at least 7 years following the end of the tax period to which records and documents relates that supports the information provided in a tax return or in any other document filed with the FTA, and enables the taxable person's taxable income to be readily ascertained by the FTA. Similarly, as per Article 56 Clause 2 of the Corporate Tax Law, an exempt person for corporate tax purposes must maintain all records that enable their status to be readily ascertained by the FTA for a period of at least 7 years following the end of the tax period to which they relate. Article 3 Clause 3 of the Tax Procedures Regulation mentions, legal representatives and tax agents must retain the books and records of the person they are representing for at least 1 year after they cease to act for that person. Extended retention periods. Article 3 Clause 2a of the Tax Procedures Regulation states, if there is a dispute between the person and the FTA in respect of the person's tax obligation, then records must be kept for an additional 4 years, or until the dispute is finally settled, whichever is later. Article 3 Clause 2b of the Tax Procedures Regulation mentions, if a tax audit is in progress, then records must be kept for an additional 4 years. Article 3 Clause 2c of the Tax Procedures Regulation states, if the FTA notifies a person prior to the expiry of the standard retention period, that is 7 years, that it is about to initiate a tax audit, the person must retain records for an additional 4 years. As per Article 3 Clause 2d of the Tax Procedures Regulation, if a person makes a voluntary disclosure in the 5th or 7th year as applicable from the end of a tax period, he must retain records for an additional 1 year from the date of voluntary disclosure submission. Method of keeping records. Under Article 4, Clause 1 of the Tax Procedures Regulation, accounting and commercial records can be retained by creating a record and retaining the original documents which support the entries contained in the record. Creating a record and retaining the information contained in the original documents, provided the information contained in the record is identical to the data contained in the original document, and must be available during the standard and extended time periods referred to above. Retained or stored as a photocopy or electronic copy, and an easily readable copy can be reproduced if requested by the FTA. Retained or stored in a manner that enables the FTA to verify the person's tax obligations. Article 4, Clause 2 of the Tax Procedures Law states, the FTA may specify the rules for maintaining the information contained in accounting records and commercial books, and impose reasonable requirements for ensuring that the information is available as if the original records themselves had been preserved. Transfer pricing records. Transfer pricing documentation requirements are already covered in our video number 17 of UAE Corporate Tax Knowledge Series. Link is provided at the end of this video. Corporate tax deadlines. In our next video, which is the last video of the UAE Corporate Tax Knowledge Series, we shall see how rules for payment of corporate tax are aligned to the submission of corporate tax returns. Link to the last video is provided at the end of this video session. This ends our video session. Subscribe to our channel, and click on notification icon to stay tuned to the series of valuable material that will cover all aspects of the UAE corporate tax. Our partner is available for free consultation who is holder of FTA approved UAE corporate tax qualification. His contact details are provided here. Visit finexcel.ae. Navigate to our clients and testimonials webpage to see more clients' review on our services and our major clientele. Contact us for more detail. FinExcel. We create value that matters.